Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Monday, March 21st, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the current session and the upcoming week. Here's a look at the daily time frame of the ES. What we've been talking about the last few weeks is how prices had a higher value relationship week over week, as you can see with the weekly pivot range here. Prices closed for the most part above the upcoming week's pivot range, opening above it as well. You're seeing the same relationship here. Typically speaking, that implies that further buy the dip strategies will continue to work for the most part until proven otherwise. And what we mean by that is every time price pulls back into the pivot range in an uptrending market, that's usually a buy opportunity. Pulls back to the pivot range, it's a buy opportunity. And so right now we have the same thing coming in. 2019 is the bottom of the monthly or the weekly pivot range. A push into that area could offer a buying opportunity for a completion of our move into 2061. We talked about back last month how this rejection here could open up a move back toward the center of the key range, followed by a continuation back toward the HVN and the top of the key range at 2077. So overall, the ES continues to push toward that end. Additionally, you can see here after price sold off from this high and sold off into this recent low, when it failed to hold below this low, the implication was a move back to the middle of this range, back to and following a move all the way back to the top of that initial impulse sell-off. So right now we're almost a 100% round trip reversal all the way back. I would expect that completion to be made sometime this week. So again, if price pulls back early in the week, we could be looking at a continuation toward that HVN above. Failure to hold above 2,000 will be very, very important, and that would suggest a further pullback or retracement to lower levels, likely back toward 1941. Here's the intraday time frame. What's important about this time frame right now is how price is currently trading around 2044. That's the 100% expansion target from the key range we had last week, dating back to early in the week here. Finally reached that target this morning, or an overnight trading here. One thing here is that we finally reached the midpoint of the session's overnight range. That means we have now a key range that we can play off of. So this low here, 2031s, up to this high as 2044s, and then you have a midpoint back at 2037.75. That's going to be the key range to watch early in the session here, with breakouts likely leading to moves in the forecasted direction. So we're going to continue to watch this here near the upper end of the current range, and basically any push beyond 2044s opens up a move into 2049 and 2054. Failure to hold above 2030 opens up a push back toward 2019, and that's going to be the bottom of the pivot range that could offer a buying opportunity at some point today. Let's take a look at crude oil. Here's crude oil in a daily time frame, something we talked about in the trading room last week, and was really that 42.50 key level. So basically on this new front contract, which is the K contract, the May contract for 2016, you see the 42.50 here. That's the previous key range low. Price pushed through it, dropped to lows. Here's where we've seen our recent bounce, and there's 42.50 right into that level, coming into 42.49, and has already pulled back off that level to begin the week here. I said before, we're going to be watching composite VPOC. We now have that at 40.08, a retest of that level. Bulls want to defend for a squeeze into the next upside targets, perhaps into 43.59 and 44.22. Any failure to hold above 40.08 opens up a return back toward 37.65. Key LVN there, which was very similar to that 36 LVN we saw on the previous contract. Below that level opens up a push back toward the next HVN below, which is 34.25. So right now we have a clear range to watch out for. We had a nice squeeze event over a 3.5 day period. So right now pulling back could offer another buying opportunity for another squeeze higher. Any failure to see acceptance above 42s here, that's a lot of rejection we saw above that area, above 42s. If there's more rejection at that area, we could see a push all the way back toward 36.60 ahead, 35.60 ahead. All right, let's take a look at the intraday time frame. On an intraday basis, what we talked about before was how price had returned away from this 42.50 level, seeing that clean rejection, and then how price walked downward. we were talking about a return back to this composite VPOC 4008. So far, price is holding below the key level at 41.35. That would suggest further weakness into 4008. Look for bulls to want to defend 4008 or even as low as the Fed level at 39.42. Any bounce needs to get back above this 41.35 to see another retest of previous highs. So this is going to be the pivot, 41.35. Bearish below, bullish above. All right, let's take a look at gold now. Here's gold in a higher time frame. You can see price continues to hold within the stacked and sloped on a higher time frame basis. Basically 1239.5, very important. Short term 1233.30 continues to be bid. So right now pullbacks have been bid, but really we haven't seen much of follow through outside of the recent range that we've seen develop throughout the month. So this is important here. We could continue to trade within this range until further expansion is seen. At some point, expansion from this range should spark the next major move. If we take a look at the intraday time frame, we talked about how 1272s was an important level where we've seen nothing but rejections above that level. So when price failed to get above it, we mentioned 1263.90 was the pivot. Failure to hold that level opens up a walk down all the way back toward 1233.30, and we're seeing that come to fruition so far. So I would say right now 1250 to 1251.5 offers an opportunity where bears want to defend for a push into that 1233 as we head into the early portion of the week. Now if we take a look at the NQ, the NQ right now is trading a very, very tightly coiled range. And this is all above 43.55 up toward 44.12, key levels here. This 43.55 has been very important. Price has traded the last 3+ sessions above that level. Failure to hold above that level opens up a price move back toward 41.80s, and that's going to be the previous month's close price. Holding above 43.55 opens up a continuation to the next upside target, which we have at 45.23 to 45.30. Now, if we look at the intraday time frame of the NQ, you can see very clear key range that has played out over the previous week here. And then we started trading a neutral key range where we traded in the middle portion of that range. Now you can see that thing is extended even farther. Basically, this key range from 43.59.75 to 44.12.75 is the major range to watch. We saw an early failure to get above the top of that range earlier in pre-market, which could mean we're going to test the opposite range soon. Any push beyond 44.15 sparks a continuation toward 44.39 with a shot at seeing a move into 44.65. So this is going to be big time. If we can push through those 44.15s, much more strength can be seen. Otherwise, the rejection could push this thing all the way back to 43.30 with a shot at seeing 43.06. So we'll continue to watch these boundaries here for some sort of expansion event later on to begin the session and the week. All right, that's it for now. Let's see how this thing plays out heading into the new week of trading. Good luck and trade well.